Hello, hello. Good morning. Welcome to another ES Futures Trading stream. Today is Wednesday, September 20th. It is 9:55. My bad, 9:25 Eastern Time. 9:25 a.m. Eastern Time in the US. Alright. Let's go to the market now. We have this break. I mean, we are very close to the opening. I guess I cannot talk that too much today. But we have this break yesterday that changed the weekly time frame. It changed the weekly time frame, which was the only one who was going to the upside, while the daily and the monthly were trending lower. Now the weekly has changed. The market has taken the previous week low out, and not just that, but also if you use here and go ahead and use the current contract, it actually took 3 low. I didn't see this one actually. I realized this later yesterday, but we have a pretty nice balance in the current contract, really tight balance here, and took these 3 lows out. Okay, but I think this is what most traders are watching. This one over here. Now, the market now is in 4-week balance, taking this low, targets this low down here, 44.23, but this is a weekly time frame. Okay? This trade, this directional move may take weeks to develop. It not necessarily will happen right away. Also, again, the market was bought yesterday from the 100. From the 100, it has nice. Now the market has excess. Notice how this range, we have 8-day range. We have excess on the upper side, excess on the lower side, and the market now is about around the center, kind of like about the center. I mean, this happens all the time. If you pay attention, this happens all the time when there is some kind of significant news event that is going to happen. That is a schedule, like the FOMC, for example. The market is like here. The market can go higher, can go low. Now, inventory is very short now. Inventory is short, and it has good supply to go high. From yesterday, not from yesterday, but from Monday, actually. From Monday, we have this. Everything that happened yesterday started from very weak base on Monday. Exactly half back here. The market has a pullback here. Now, opening above this is going to repair this week high. Yesterday, it repaired the week low and have downside continuation, and the one that took this week low out, it repaired this low, and not just that, but also a couple weekly lows as well. Now, opening up here, today we have a gap. Gap guidelines, go with the gap, does not fill, any gap does not fill quickly. Start monitoring value if a gap is filled. My main references are this distribution here, if the market can close this distribution, and the pullback low we have here yesterday, because the market is going higher. The direction of the movements to the upside, and the market has a pullback yesterday to that low. This pullback is weak. Okay, this pullback is weak because it was exactly made to the previous period low. All right. Settle is down here. Inventory, you can see there's a good amount that's below settle, good amount above settle, kind of like It's long. Inventory is long. Now we have the 4,500 here. This is a peculiar situation. We have 4,500 here. This low or this high has been repaired. I don't think it's a good. It has excess to the upside, but I think that's good. Right? You can see that maybe these sellers here, these shorts are still, the market is still trying to sell. Let's see what the market does with the gap. Let's see what the market does with the gap. I am very interested. On days like this, when we have these events like FOMC, the market tends to be very quiet. Doesn't have to be like that, but because everybody's expecting. Nobody wants to up front. Nobody wants to be too short or too long in front of that number. Now the market has stopped one tick from closing the gap. It is one tick? 2 ticks, right? 2 ticks from closing the gap. This is used for traders also. This is a good entry here. Now your stop is closing the gap. That was a good entry. I didn't feel like the volume dry here. I didn't feel that. The market just came back here, was bought from this level, but I didn't feel like volume dry there. There's just a mechanical buying that happened here. I'm not saying anything here. Oh, I got a big mess in my desk. Oh boy. All right, okay. Let's open the overnight. Ooh, this inventory is very long. It came from here. This inventory is long. Mostly long. Now this can be a counter action. This low is, I don't like this low, man. And also, as I say, this is a peculiar situation today. We have the 4,500 here, and you have FOMC in a couple hours. You have a gap. The market is at the center of this 8-day range. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have excess on the upper side. Look above and fail. Look below and fail. The major trends are to the downside. The monthly and weekly are now the weekly is not trending lower, but the upside trend has ended. Let's take one day at a time. Now, what's happening with the bond market here? The bond market is good. The intraday has taken almost taken yesterday's high. Okay, but the daily chart is kind of bothersome to me. The bond market is trading at very, very close to the lows. That's kind of dangerous there. It may take an event to break the lows, to take the lows out, or it can just rally from that level. The market is right at this area with this high volume from this day. Overall, this day has low volume. Monday here. Okay, the market has taken this level out, just like yesterday, for example. When the market in the morning, the market came up here, it couldn't get into this volume and just was rejected from that level. Now it's adding volume here. It's adding value here, just on top of this level. So there's a lots of volume here in this area. This day here, which was Friday, has tremendous amount of volume here, here, and here. Notice how this medium volume area has 20s. This also has 20s, almost 30,000, right? And compared with this day, this day, this day, this day, this day, right? Just this medium area of volumes are considerably higher, just as high as these reds here. So there's a lot of volume here, and there's also a lot of short inventory in this day. Okay, the gap has not been closed. That's a good sign. That's a positive sign. Location here. I've got a good location here. The market take this market close to this. You're long somewhere in here. Now this is very typical level to go long here. You just risk a couple ticks here. 2 or 3 ticks is the risk that we have here. Now, what I am interested in the upper side is not even this one, because this high looks like we have excess, but it comes from POC. What I am interested in is in this level here. What the market does, if the market can close this level, which means it's closing these distributions here. Notice the shape of this day as well. If we put these 2 days together, we have 2 distributions here. Now even we have 3. This day here. Put this day together with this one and this one. I mean, you have now we have elongation here, elongation to the downside. We have excess here on the upper side. Boom, very nice excess here. The market goes higher and there's a rejection here. But check it out where this high, well this day was also sold. And exactly from POC. This day is POC. So that's why I say very mechanical trading. Signs of mechanical trading are all over the place here. Just be careful. Now, volume, we're back to usual, very low volume. Just ask yourself this: who wants to be long in front of FOMC? Who wants to be short in front of FOMC? Whatever happens, there can be a correction before the number. A spike here, upside continuation towards this trend line here. That line has changed today. Let's see where it is now. Whoops, it's right there, 4503, right here. This trend line, this daily trend line today is up here. It's right where this market is right now. Another mechanical sign. This high is not good. Where I got that level from? Man, I missed this. This was important today. God damn. Is this like this one here? You can expect some selling coming from this level. Which is what happened exactly at the opening, huh? It's not sell. But it could come, the market can come all the way until here, or can just go through this, take this high, and trade up. Remember the 50 is also right there. I have it here as a 4510, is this one here. So those are levels that traders follow. Now I think that this has been corrected now. I'm still going to leave it there just in case. Oh no, this has been corrected now. I will check now. This is also held back POC. No relevant news other than FOMC. The market is in this period where we have banks starting to report earnings. I guess it's October 13. So we have this period, right? From now, maybe like 3 more weeks before earnings. So the market will do may do some rebalancing adjustment before earnings start to pour. The dollar is higher. The dollar has an impressive rally. It's impressive short covering rally. Crude oil is having a pullback. I think it has gap. Yeah, it has a small gap to the downside, crude oil. Very soft, you know. At these levels, these trend lines that you can see here, you know, if the selling comes on this level, I guess it's more a little bit. I mean, yes, this would be daily time frame, a little bit higher than the intraday trading. The monthly, ooh, look at this. The monthly is an inside bar, huh? How many weeks? How much more before the 1 week? 10 days, 1 week and a half before the end of the month, and we have an inside bar in the monthly. The trade is go with the breakout of the inside bar. Well, let's just assume that if this is going to close as an inside bar, this is a really nice inside bar, you know? Because you have a range. You have this range, 2 week, 2 month range, and the range of the inside bar is quite small relative to the size of the range. That's a nice thing here. By the time the market closes, I want to see where the daily is. Daily may be away, maybe trending higher. If it's trending higher, can have good also going higher here as well. You having an upside breakout. All right. Notice how this market dries. Do you see how fast it came towards the downside? Towards the gap, towards yesterday's high. Like it just come to volume, get to that level, close to that level, was rejected, was bought from that level, and notice the difference the difference between that movement and the movement the market is having now. I'm not saying nothing here, right? I'm not saying the market is going to break. I'm just the only thing I was trying to pay attention to the difference of how the market is trading now at the highs, at today's highs, and how it was trading at today's lows. The way how it was made. That's tempo. That's space. That's speed. Okay. I don't have any intentions of placing anything here. What? Give me a second, please. Now, from yesterday, okay, let's remember yesterday. Yesterday, we have this auction to the upside. Okay, the market has a pullback low here, took these lows out, and the action resumed to the upside. It was too late in the session, right? It has no excess in the high. The lack of excess, the weak high has been repaired, and the auction to the upside continues today. This is a continuation of yesterday's action. As long as the market doesn't take, or the market doesn't take the current previous low or the previous period low, in this case, when market B opens and B takes out a low, the action remains to the upside. That's another way to monitor the direction of the market. Disregard this volume, this profile here. Now there was an attempt to counteraction the long inventory. There was some mechanical buying that happened here. I don't like this low here, but it is a low. It's today's low. And now, if I take this trade here, down here, with my stop bill at previous high or one tick below, I would have serious doubts now. Okay, I would be questioning that trade because it doesn't have upside continuation. It just dies here. It comes really fast, nice action here, and when it comes out here, it just stalls here. It may have good references. Some selling may appear from the 50s. If this one's taking, the next reference, which is weak, is this high, and the main one to me is this one up here. Right? But I would be having serious doubts now. Okay, I probably will have moved my stop higher, or hedge it, or take some profits now. I don't like this upside movement. So what I do is I can even close it here. So I just don't like what the market is doing here. It can go higher, but that's not the way how I trade. I don't trade on expectation of what's going to happen. I trade what the market is doing. Just dying here and putting things in context. What's going to happen later today in a couple of hours, where the market is at, what could have been the fuel of this movement, what happened when the market took these weekly lows out. Notice how I erased the level here. I just wanted to know where these weekly lows are. This for me was the most important one. This week has been taken. There's another range in the daily time frame that is this level here, the 44.68, this level down here. That range has been penetrated twice. The market has got inside that range a couple times now, 2 times now. Both times have been rejected. But, sometimes when the market goes back towards those areas, it pokes a couple times, there can be one time, that level becomes weaker and weaker the more the market trades or gets through that level. The next time the market can have penetration, deep penetration into that range. Which range is that? Let me show you. Let me show you what I'm talking about. This is what I'm talking about. This range here. I had this range highlighted for so long, and now I have put it back because I saw this thing happen yesterday. Now this is a 8-day, 3-8 or something like that, 8 or 9 days range. The market has penetration of this. It's rejected. Now has another one. Is it rejected again? Maybe the next time market comes is bought above this high and can have some rally, or if this level is taken out, the market can go even deeper. But also, this is the averaged chart, and this is the current contract. Notice where it has been bought from 100 here. Right. The 50 is way up here in the current contract. But you can see where which references the market are using, right? Which 100 is using? This one or this one? I take this level as a reference. Most of the time, a lot of the time, this is based in observation. You do your own observations and you just give weight to what you observe. Okay, sometimes what I observe, it might just make no sense. The market doesn't pay attention, so I just discard those kind. I just keep moving on and keep watching the market. And when you you keep watching the market, you will see what the market. We see what the market. What are the relevant levels, for example, relevant pieces of information, or those pieces of information the market pays more attention to, because some references are more important than others, and you just base it on observation. I may have this level here for example, but the market trades through, keep going lower, and never pays attention to that. So, I probably will just get rid of this. But if the market stops here, go high and comes back, it's been bought from this level, it is. I can see that the market is paying attention to that. So I keep it. And what happens now, this level, this reference is also the opening. So I can even close this, or I can erase, and I just keep the opening. But I decided to keep because this is a reference in the daily time frame. There's a trend line there. And programs, because these computers that are programmed by humans, right, to remove the emotional factor. Companies, hedge funds, may have take a decision. Okay, I'm going to buy. We're going to buy from the 100 moving average or from the 200 moving average or whatever. You just program that. Buying is going to happen at around that level. If the market comes close, 2% close to that, we're going to buy. Market close. The market gets 2.2% below, I can buy or whatever, right? Things like that. So you remove the emotional part, the human part from that decision. But the problem itself is nothing. Right? As Jim says, to buy here you are using a program. You are using an algorithm to buy, some form of algorithm to buy. Any questions? What do you think of this market? Are you long? Okay, remember this is a good trade here, down here. We have a gap. Go with any gap, then us fill rather quickly. The gap wasn't filled. If the gap is filled, you have your stop right here, right? Dum, 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 dum. All right. Yesterday, if you have replay capabilities, check yesterday's trade. The second part of this day, starting H, you will see something here. You will see the action of bigger time frame traders, or just traders with bigger capital here. Now the market comes close to this level. For example, it takes this high out, this force, this volume here coming in. Comes here, boom, have a spike. The market next period doesn't take even this, doesn't get back inside this range, much less. Not even this one here. And then it comes back to close to C high, and then there's a big jump here, boom. Again comes down here, and then another spike too. Then another spike from here, from this level. That is, just check that out, and that's the action. Those are bigger. That is the action of bigger trade. That's bigger capital, bigger traders here. Very short time frame, daily time frames or intraday time frame as well, but bigger capital. Okay. Bigger money here. There's nothing here. This market. There's nothing here. That's what I see here. I don't see anything here. So everybody's just waiting. What's going to happen? What's going to happen at? What is going to happen at 2:30 or 2 p.m. or 2:30 p.m. today? So why I want short this market? Value is higher. We have a gap. Why I want short the market? The direction of the actions to the upside. Yesterday at the opening, we have a downside action, the action to the downside. The action yesterday was extremely mechanical. Every single reference. We have a bunch of references yesterday hitting the lower side. We had like 4 or 5, something like that, 4 or 5, 6 references in the lower side, and the market stopped. The market stopped at every single one. We have this one, market stopped. Market stopped here. We have this one, market stopped here. Then we have this one, market stopped there. Then we have this one, market stopped. Then we have this one, stop here, stop here, stop here. Every single one. So that's a sign. So that tells you who is the dominant force or who is conducting the trade. Who is the competence? Very short time frame trades. Very short time frame. So the odds that movement being a lasting one were not that good. And if you add to that the previous day, okay, has an extraordinary low volume. Really low volume the previous day. A downside day, but the volume was extremely low. Granted, this high was mechanical, and we have weak level here and weak level here as well on both sides. But the volume was there was nothing there. Very low volume. So whatever happened, we were thinking or we were talking about that yesterday as well. So, maybe I think even Monday. So whatever happens out of this movement, I am not going to be that confident that it's going to last or is going to have a continuation either to the downside or to the upside. Whatever happens out of this is going to be very questionable. So notice how you have these observations from the previous day. It's not just I may be focused on what's happening right now. My focus is very short time frame. I have been focusing in the intraday, but I use the information. I use what happened what happened and what is happening in the other time frames. You got these references, these weekly lows from yesterday. While the market was doing this break, while the break was happening, every weekly low was being taken. One after another one after the other one was taken. And once those ones were taken out, the next weekly low was like 20 points below, something like that. And after the market has really had a significant break to the downside, with lower volume in the previous day, and the break was having higher volume, but relative to the previous day, which was low, but similar to what was the lower volume of what we normally have. All right. Now today's high has no excess. That's not a good high. Daily low is also questionable. So, okay, I'm just going to watch this thing. No intentions to do anything here. Upside continuation, we see the 50 being taken, this high, and I want to see what the market does with this level here, up here. And the lower side, we have my main reference in the lower side is this pullback low here. These weekly lows are not relevant now. That's why I put it in gray. Don't pay too much attention to this. They have this week. What is this? What the heck is this? Yeah, this is a weekly level. Is this a weekly level? Why I put it here? I guess it was half back. exactly from L half back, this M. That's why I have a gray. This is a weak level. This pullback low is also a weak level. Remember, it's also a weak level. If I will use 2 tick chart, this is the low. This is very close to J. 1 tick from J. And but that's not a reason why I keep in that. Right? Notice that the pullback low is to this day low here. And the pullback low is to this day low. As long as this pullback low remains here, the market can break, come back inside this range, coming back inside this range, targets this low. But as long as this level is not taken, the movement, the directional move remains to the upside. Because you can see it, right? You can see it here. You can see it here. You can see it. Market is going higher. There's a pullback, and then just having upside continuation. And as long as this one is not taken, the movement remains. The directional move is to the upside. This will represent the opposite. Right? That this movement, that whatever happened here now has been corrected and has good also of upside continuation here if this level is taken. Okay, but by the time this happens, probably the market will be several things can happen. The market can keep going higher, but if depends on how that movement is made as well. But this is my reference on the upper side, not this one, but this, the close of the distributions here. In the same way, how today we have the market didn't close this and was a buy here, same thing can happen here. Okay, depends how this market trades towards when it's getting close to this area here, and if the market doesn't have it, if it stops short from closing these distributions, that is a short. And this is location as well. It's a location, right? Because the stop is just this level. The buy can be here somewhere, and the stop is here or 1 tick above, and that's it. That's because if the market closes these distributions, there's a good chance the market can travel towards the opposite side. But it all depends. Let's put things in context. Just and not just let's not plan what I am going to do if that happens, right? Because I'm going to be too much focused in that, and I might miss what's happening right now. Fortunately, nothing is happening today. Nothing is happening today, and we can think about these scenarios. Alright guys, it is 10:10, and let's listen to the questions. I guess I'm going to call it a day. Probably I'm going to take a nap here. Let's see. I should stay on I usually don't step away from the trading desk. But I have my daughter that was sick today. And I guess I'm not going to be too much. I also have an appointment at noon, so I don't have. I will be doing more than one thing today, and when you do more than one thing, you cannot focus on, or I cannot focus on the market. When in days like this, okay, pay attention to this. Just pay attention to what's happening here. Not how this body, this market is trading, right? It's slow. The market can come up here, then can come down here, then come back up again, then come back down here, maybe towards this level here. That's very boring. Absolutely boring. But when that happens, when the market puts you to sleep, something can happen. Okay, I don't like to step away from the 30 days when I see this kind of environment, because there's always often there's something happens. Okay, all right. Stay safe out there. Wish you good luck. A wonderful rest of the day. Bye bye.